Good morning, everyone. Please welcome to the stage BCL of Texas President and Chief Executive Officer, Raquel Valdez Sanchez.
Good morning, everybody. It's great to see you all here today. And on behalf of the co-host committee, welcome to Austin for the 2026 Small Business Finance Forum. So I'm a fifth-generation Austinite, born and raised here in Austin, and it's really exciting to be able to welcome you all here. Austin's been an organization, a community that's really been growing over the last, give or take 20 years since I've been in the CDFI world. And with that, it's where Austin has a lot of local businesses that our CDFI organizations have really helped to support. CDFIs like Big Austin, People Fund, Lift Fund, as well as organizations like Just Communities, who's really changed the game in what CDFI lending looks like. And organizations have moved into the Austin market like DreamSpring, who have all been part of the host committee to be able to make some of the great stuff here happen. We've also seen that when it comes to CDFI work that we do, that we're really working with not just the businesses, but people. Because our economy and our local economy specifically is really grown by the people from our communities. And y'all know that as CDFIs in the room. And so I welcome y'all to Austin, and I'm excited you're here. As an Austinite, I know that I can be able to help show y'all some local flavor. So find me to be able to get some recommendations. Other than that, what I want to do is I want to welcome Harold Pettigrew to the stage. Harold and I have known each other since 2017. We were part of the OFN Fellows program together. And with that, it's where I've known Harold to always be an advocate for our industry, as well as CDFIs that are doing the day-to-day work. Harold's been the OFN president since 2023, and he's also been the 4th president of OFN. And so over the years, he's really led organizations, and with his leadership, he's led the Washington Community Investment CDFI Fund over in Washington, D.C. So let's give Harold Pettigrew a welcome to the stage.
Good morning, everybody. Sound a little caffeinated. One more time, good morning.
Good morning.
First, I want to start just by thanking Raquel. As she mentioned, certainly we've known each other for a number of years now through the Opportunity Finance Fellows program. And Raquel, just to say, it's been wonderful seeing your rise, certainly to leadership. So thank you. Let's give another round of applause for Raquel. Welcome to Austin. I definitely want to thank you all for coming to our 13th Small Business Finance Forum. We kicked off the forum last night with a wonderful reception. And just a reminder to some of you, we're only 80 miles from San Antonio, so be careful with any Knicks jerseys or any references to a certain state that might start with New and end with York. I want to start by thanking our sponsors. Thank you to our lead sponsor, JPMorgan Chase, for the Small Business Finance Forum. Let's give a round of applause. And to our silver sponsors, Charles Schwab Bank and Wells Fargo. As well as our special support sponsors and partners, the Mass Mutual Foundation. Round of applause. MasterCard Strive. And Wood Forest National Bank. I want to thank you all as well, and certainly to some of our board members who are here for OFN, and to thank, as I always like to start, our hardworking team at OFN, because they wanted to make sure, as we do year in and year out, that you have a wonderful experience. So if we could give a round of applause for the OFN team. We're also honored to welcome Dan Pische, Director of the Office of Financial Assistance at the Small Business Administration. And I have the pleasure of sitting with Dan a little later this morning for a discussion of what's happening at the SBA, a discussion on the importance of small business, and most important, the ways that we can continue to partner to ensure that small businesses are supported. Let's give a round of applause for Dan. "13 years ago, OFN launched this event because small business lenders, all of you, needed a space of your own where the content, the conversations, and the connections were built for you. That is what this forum was designed to be, a place to support you for the challenges and the opportunities ahead. And 13 years later, I want to say it plainly, you all have delivered for small business. As small business lending CDFIs, you didn't just grow, you became one of the defining forces in our field. In 2012, when we launched, the country was still climbing out of the Great Recession. Low-income communities and small businesses alike were last in line for recovery capital. And you were there filling the gaps. You built the muscle during this period. And when disruptions and natural disasters hit, you didn't wait. You jumped in and showed up time and time again. When COVID hit, the country needed billions of dollars in PPP support to move fast and to move right to businesses that needed support. And that muscle was used at a national scale, helping to strengthen small businesses where they needed you most. You delivered in ways the industry had never been asked to deliver before. And in doing so, you helped put the CDFI brand on the map in places it had never reached before. With policymakers, investors, mainstream media, they all saw what this field could do under pressure. And it changed the conversations about CDFIs permanently. It changed who calls us, who invests in us, and what we can build next. But it's not been easy. It's not been easy to get here. And the fact is, it's never been easy. But all of you, the people in this room, and our colleagues all across the country, kept showing up anyway. And I want to take a moment to recognize some of those efforts and some people here. Back in 2014, JP Morgan Chase ran a grant program that seeded a simple but powerful idea. Instead of funding CDFIs one at a time, what if we funded a collaborative? What if we helped CDFIs come together and build something bigger than any one institution could build alone? One of those grants was $4.2 million to support veteran-owned small businesses. 3 CDFIs came together as the first cohort, led by People Fund right here in Texas. That seed has grown into the Veteran Loan Fund, a coalition now spanning 14 CDFIs, more than 9 investors, and 10 technical assistants and strategic partners. A few months ago, they announced more than $100 million deployed to nearly 1,400 veteran and military spouse entrepreneurs. $4.2 million that grew into $100 million. Three CDFIs began the momentum, and that became 14. That is what this field does when it builds with intention. Leading the Texas presence of the Veteran Loan Fund is Gustavo Lasala, a former OFN board member and one of the hosts of this week's forum. Gustavo, thank you. Let's give a round of applause. Thank you. Thank you for your leadership and also the board of the Veteran Loan Fund, each one of them also OFN members. Let's give a round of applause for the coalition as well. Thank you for what you do to all of you that are a part of the initiative and for serving those who served our country. To Chase, I want to make sure we acknowledge as well the 2014 bet on collaboration paid off in so many wonderful ways. Thank you for your support of this initiative. I also want to recognize Kentucky Highlands Investment Corporation. Kentucky Highlands has been at this since 1968. I did say that year correctly. That's nearly 60 years. Working across 22 counties in southern Kentucky, where poverty and unemployment have been chronic facts of life for generations. Last year alone, Kentucky Highlands closed 155 SBA and USDA loans totaling more than $21 million. A decade ago, they launched the SOAR Small Loan Production Fund to help small farmers in eastern and southern Kentucky grow healthy food and build a local food system that can actually sustain them. 415 loans, nearly $4 million, one farm, one family at a time. Their president and CEO, Jerry Ricketts, said something that has really stayed with me for a number of months, that 1 in 10 people living in Kentucky Highlands will sit down to dinner tonight with someone at a table whose job exists because of a company that was supported by Kentucky Highlands. It's 1 in 10. Actual families, actual tables, actual dinners. That is what this work looks like when you zoom all the way in. In this room today, we have Brenda McDaniel, Kentucky Highlands EVP and CFO. Brenda has been fighting for these communities and for this industry since 1978. Nearly 5 decades of showing up for people that a lot of institutions never showed up for. Brenda, please stand up so that we can acknowledge you. A $100 million veteran lending coalition, 5 decades of showing up for Eastern Kentucky. These are only 2 examples, and I could spend the rest of the day highlighting the wonderful work, the impact of just what's happening actually here in Texas, let alone the work and the impact of what you all are doing here across the country. None of that happened because conditions were favorable. It never does. It happens because the people in this field do not wait for favorable conditions. We create them. The federal landscape is shifting. Funding is uncertain. There's real pressure on programs this field has counted on. I know you know this. And I know you're navigating it every day in your loan portfolios and your pipelines and the conversations you are having with borrowers who have nowhere else to turn. But as CDFI leaders, certainly what I appreciate and what I know to be core to your fundamental character is that regardless of the circumstances, you don't quit. Because we know the people who are counting on us, that we're often the last resort, or we sit between what is the promise or the peril of an entrepreneur being able to continue on. We've never quit, and we're certainly not going to start now. OFN is not going anywhere. We're here to support you. That's our purpose, that's our charge, and it forever anchors us to what we do in this field. We know you're not going anywhere. Too many people count on us to support them, to anchor them during good times and bad. The communities we know as well are counting on us to do what we do. They can't afford for any of us to go anywhere. That is why we're here. Use the next day and a half. Use it well. Find the partnership you did not have when you walked in. Borrow the solution. Over drinks, I would frame it a little differently, but borrow the solution that someone else may have. that they've already built and take it home. Have the conversation that changes how you think about what is possible. The work we do in this room goes back to every small business owner, every entrepreneur, and every community counting on us to simply keep showing up. This field has never had it easy. We've always found a way. So let's make sure of these next couple of days, we connect, we support, and we get to work. Thank you, everybody. Have a good morning.
Please welcome to the stage Opportunity Finance Network's Chief Public Policy Officer and Head of Government Affairs, Dafina Williams.
Good morning, everyone. My name is Dafina Williams, and I am OFN's Chief Policy Officer, and I'm so glad to be here with you today at the Small Business Finance Forum. Since we were here in Austin last year, we have seen both headwinds and new opportunities throughout the policy space. Just a few weeks after we were together, the New Markets Tax Credit program was made permanent as part of the One Big Beautiful Bill. This was the culmination of decades-long push across the industry, with partnerships between CDFIs, banks and investors, and community advocates demonstrating that even in the current policy environment, CDFIs are still able to get things done. When the CDFI fund was threatened with a reduction in force last year during the government shutdown, we worked together to reverse those cuts. The result was that 105 Republican members of Congress came together to voice their support for the CDFI fund, and those staff were reinstated. That momentum led to deeper relationships in both sides of the aisle and cemented bipartisan support for the industry. The challenges the CDFI industry have faced the past year have raised the profile of the industry and has also helped us forge new alliances and a broader base of allies and champions. As we have navigated this work, OFN has also had to adapt its work and approach to meet the moment. We are focused on bringing you the news and information that you need in order to navigate this federal policy environment. Just a couple of things we wanted to note. Our weekly newsletters and monthly webinars provide updates not just about the CDFI fund, but about the broader legal, political, and regulatory context that we all are working in. In the last year, we have launched 11 action alerts focusing on protecting the CDFI fund, advancing housing priorities, and ensuring the timely release of federal resources, resulting in over 1,600 advocacy messages from all of you directly to members of Congress and the administration. We hosted 4 Capitol Hill fly-ins, bringing together more than 230 advocates, board members, state coalition partners for nearly 170 meetings of Congress with congressional offices and committee staff. This engagement has actually produced tangible results. We've seen the Senate Bipartisan Community Development Finance Caucus grow by 4 members in the past year, now up to 32, almost an entire 1/3 of the US Senate. And it's not just one type of member of Congress. These are the most conservative to the most liberal members have all come together to voice their support for the CDFI fund. And these voices have also helped us preserve funding for this vital CDFI fund and SBA programs through the congressional appropriations process. And after months of advocacy from all of you, we are finally seeing the fiscal year 2025 funding begin to move from the Office of Management and Budget to Treasury, and hopefully seeing awards be made soon, hopefully soon. Yes. These policy wins do not happen by accident. They happen because we work together to advocate and we pivot to make sure we're meeting the moment. Earlier this year, we hosted our first ever National Policy Summit in Washington, D.C., where we were joined by congressional staff, federal agency partners, and many of you. Among those guests was SBA Associate Administrator Thomas Kimsey, who we were pleased to have join us to give us an update on agency priorities, entrepreneurial development programs, and how to deepen the partnership between CDFIs and the SBA. The summit was a huge success, and we'll build on that. We will continue to look for new ways to communicate and share advocacy opportunities with all of you, because we know that our connection to the policy environment has never been more important and vital for the work that we do. The communities we serve cannot afford for us to all sit on the sidelines or go at it alone. Our strength as an industry depends on our willingness to build coalitions beyond our own walls. Speaking with a unified voice amplifies our power in Washington and at the state level. When CDFIs speak with one message, policymakers hear an industry, not individuals. That means we're going to have to partner with affordable housing groups and small business groups and policymakers and others that we may not agree with 100% of the time. The most successful policy wins our industry has had have come from bipartisan administrations, both Democrats and Republicans, and our communities need to be able to rely on us regardless of who is in charge in Washington, D.C. At our core, we are about partnering to build a better future in all communities and creating opportunity for all. SBFF itself is a testament to the strong partnerships across our industry that we continue to build. Over the next couple of days, we will dig into the challenges of small business financing and explore how we can collaborate among ourselves, with our investors, with our allies on the Hill, and our government partners. One of those important partners for the CDFI industry is the SBA, and we are so grateful to have them join us this morning. Today, we will hear from Dan Pische, Director of Financial Assistance at the SBA, alongside Harold Pettigrew, OFN CEO, on how we fulfill our shared objective of putting capital in the hands of entrepreneurs. It is our hope that this fireside chat will deepen the dialogue between SBA and CDFIs on the future of access to capital, program modernization, technology, and community lending so that we both can meet the evolving needs of small businesses. So please join me in welcoming them both to the stage.
Great job. Hello again. All right, caffeine still coursing through, got it, all right. Dan, welcome.
Thank you.
Yeah, good morning, great to have you. And first, just to start and say, and I know Dafina mentioned this, but also thank you to Administrator Kimsey as well. It certainly was a treat, not only having him participate at the Policy Summit, and certainly expressing the importance of small business, which I know this audience knows a little bit about. But also just the importance of OFN and CDFIs as well.
Yes.
You know, we're your partners here. You know, so thank you as well for being here, not only on behalf of Administrator Kimsey, but the SBA. It's a critical partner.
Thank you.
Certainly for this industry. So just to start, we'd love to hear a little bit about you. More importantly, your perspective on financing beer breweries and things. You have a prolific variable background with financing and using SBA programs. That's what this session is really all about.
All right. You did your research.
That's right.
So, yes, in a former life, did finance a number of breweries. But so just a little bit background on myself for those I haven't had a chance to meet with before. So my name is Dan Pische, the director of the Office of Financial Assistance, and in desperate need of a rebrand, as we talked about earlier.
That's right.
Grew up in Chicago, was in community banking for about 15 years.
Okay.
Worked with a community bank out of the Midwest. Ultimately, that led me to South Florida, where I was on the trade finance side for a number of years, and originally got my start in SBA lending. During the financial crisis, I took over special assets, so I was working on the troubled loan portfolio of the agency, or of the bank, and then that's how I came into SBA lending. So during that time, yes, had a number of friends in the beer industry, and I thought the SBA programs were a great tool, and then was asked to write on it, and that was the first thing I actually wrote on SBA lending, of all things. And when I did that, I had no idea I would be in this role at this point in time.
That's fine.
So.
Oh, good deal, good deal. Now, I know certainly you have an important portfolio, certainly for this audience, and for CDFIs in general, certainly with the 7A program and Community Advantage, 504 program, the microloan program. Give some perspective, just certainly on not only the criticalness of those programs, but direction and perspective, certainly of those.
Sure. I think collectively all those programs represent kind of a continuum of financing for small businesses, whether you start at the micro program, work into 7A, and then some of the larger CapEx projects in 504. And as far as a potent tool, it's a great public-private partnership for supporting access to capital across the country. Has an incredibly diverse group of lenders, both geographically, institutional focus, the size of the institution they're offering. So I think it's an incredibly important network of products and partners to help get capital out in a variety of different ways. And when you think about small businesses, their needs are varied, the market's needs are varied, the community's needs are varied, and I think having a variety of partners is incredibly important to getting the right capital in their hands for their needs, because everybody's needs are a little bit different.
Absolutely. Can we expect this year, or do you foresee any policy shifts or changes that we can get a preview of or understand that's coming from the agency?
So I've been in my role for coming up on a year now. I come from the underwriting side, the credit side of banking, and one of the areas that I'm incredibly focused on is simplifying and clarifying rules, that removing gray area, having bold, bright lines in terms of the program, what are our expectations of lenders, what are our expectations of borrowers. And it has permeated some of the recent program changes. Right now, I'd say the focus areas that we're working on are kind of threefold. Manufacturing's been in focus for the administration, and really manufacturing is kind of an ever-present focus within the agency across administrations. And SBA is really uniquely positioned for it because it's incredibly capital intensive. They need kind of all the different parts of SBA. If you think about like the working capital component, they might be expanding, they might have facilities. So we're really well positioned for that, and especially as we work on reshoring manufacturing. Food supply chain is probably the most recent announcement, leaning into our enhanced 90% guarantees through the grocery guarantee program, which also had a manufacturing component as well. So, and then working capital broadly is another area. Just we think the revolving working capital function is incredibly important as you grow, so that you can take on additional contracts without having a hit to cash flow for the business. So those are some of the focus areas, but the theme is really on simplification. We are working on our next SOP right now, which I know makes everybody here very excited. It's a little SBA humor. It makes me excited, all right?
That's right.
So how about
There you go, that's right. There you go. An
Yeah,
audience of one. Got
when
it.
people ask what my hobby is, that's my hobby on nights and weekends. But we're really trying to simplify the process, and I say we're at an inflection point as an agency. There's a lot of investment in technology, and I think that's going to permeate our programs and really shape where we're heading from here on out.
Let's pull that thread a bit. Certainly, some recent announcements that I'll let you talk through in terms of what has happened publicly, but just under this banner of certainly SBA modernization and lending modernization. Not only the technology investments, the administrators signaled those as well at the policy summit. We'd love to hear perspective there, certainly for the audience, not only on what's structurally happening at the SBA, but also investments in technology.
Sure. So on Friday, Administrator Loeffler announced an agency-wide reorganization of the SBA. So that'll play out over the next 3.5 months for the rest of the fiscal year. It was actually started when you think about the technology and what we've done in terms of kind of centralizing our funding and focus on tech. The modernization of our lending platforms is underway, and it's starting with 7A, moving into 504, but eventually we'll kind of consolidate across all of our loan programs under, frankly, a modern API-driven platform. So our technology has been built in-house, maintained in-house over the years. It is dated, and I think as we start to think about the needs of our lending partners, that this is probably the largest change to the agency in the last 20 years. And that will continue to roll out this year. And under the reorganization, so that was kind of the first piece of the reorganization. It was just kind of centralizing our technology so that we could build enterprise-wide solutions in SBA. So to give you an example of why that's important, I used to manage the international trade programs in the Office of International Trade, which is now Manufacturing and Trade. We had a Salesforce license. Capital Access had a Salesforce license. Field, Office of Innovation and Investment. So we had all these disparate systems that didn't talk to each other. Different programs had different reporting systems that didn't talk to each other. So we operated very much, instead of an agency, it was almost a kind of a collective of different agencies under a bundle,
Right.
And where I didn't have visibility into other areas. So we're moving toward a complete enterprise solution that I think will be an incredible tool for all of our partners. On the tech side, on the SBA website now, there is a kind of a bar, we're calling it personas, but it's an agent for borrowers asking about SBA questions. My team is also in the very early stages of building a lender agent, so that'll be something that'll be available to all of you, probably into 2027. But that'll be a tool that we collectively take all of our policy expertise in the agency, build the back end so that you can see the same questions we see, the interpretations of policy that we see, so that'll be an incredibly potent tool that we will be building. And part of that was the reorganization of at least my division in capital access. So my old colleagues in international trade are now working alongside capital access. So instead of having the international programs on one side and kind of the domestic programs on the other, that team is now under Thomas Kimsey's leadership.
Okay.
And again, that brings more resources collectively and restructuring the micro program, consolidating that in with the 504 program under kind of a community development focus. And there's a lot of overlap between the micro program lenders, the CDC lenders, under the broader Office of Capital Access and our loan programs, but also that all the teams are interoperable so that it's not 7A and 504 as competing products. We look at them as complementary. And I think that is, at least, I guess all I can do is bring my perspective as a lender to this, and that they're just SBA programs. Like, I didn't realize they were two totally different ecosystems. Like, I knew of CDCs as a partner on it, but I always looked at them as SBA, and I think it's important that we want them to be as interoperable as possible, because whether it's a 7A loan or a 504 loan from the borrower's perspective, we want the lender and the business to make that decision and not feel like we have a horse in that race.
That's right. No, it certainly makes sense in that regard. Now, you've touched on this a little, but just knowing as well the role that the SBA has taken with not only increased oversight and performance, and that's naturally an area for CDFIs that's critically important as well. Knowing the different ways, whether it's being underwritten or different state as well as federal programs where performance is critical, and naturally oversight as well. Speak a little about not only some of the efforts of the SBA as it relates to certainly increased oversight, tightening underwriting, but also perspective as well, certainly with this group and with CDFIs in general, shared perspective, certainly around how do we protect SBA programs, perceptions of risk to ensure that we're operating in a way that we align as partners to deploy capital.
Sure. I'll start with the credit component and simplifying that process the best we can. So we did make an adjustment to the 7A small lending program back in March, removing the focus on SBSS. And the reality is that the SBSS score works in some situations, but not all situations. And that was sort of the finding out of it. If you have a business who's operating and they need a van or a truck, SBSS is a great tool, in that instance, because it is kind of driven by consumer, kind of your personal credit. But a startup, a business acquisition, probably less applicable. So that's probably the biggest change we made in terms of underwriting, is focusing on what we referred to as a back of the napkin or a streamlined underwriting, but focusing on debt service. That is going to be a theme that continues in our programs. Repayment ability being incredibly important. We want to be flexible, but ultimately the debt service, the repayment ability, I think, is really important, because that is ultimately
The lending partner, to be
the
clear.
lending.
Not the, yeah, okay.
For the business, that is the margin of error when something goes wrong.
That's right.
Right. If their cash flow is too tight, they hit a bump in the road. There's a more limited margin of error to make that work, for the business to be successful, and that really is at the core. We want the business to be able to grow, sustain operations, and expand. From an oversight perspective, I think it's part and parcel to what we have learned and gained as an industry coming out of the pandemic response. But the oversight component, making sure that we're in adherence with the rules of the program and minimum stated volumes is going to be a continued focus at the agency.
Got it. Now, you mentioned as well, and maybe let's pull a thread from earlier, the tech investments internally, but also we know there's evolution and fast adoption of technologies, whether it's AI or other advancements that are not only impacting jobs now as we see the future of where we're going, but also it's causing a boom in folks pursuing entrepreneurial opportunities. And I think this is across many communities, many industries, where we're seeing greater entrepreneurship and formation. One, I guess, maybe provide perspective, or at least from your lens, of what you're seeing as either trends as you travel the country, and the impact of technology and the driver behind more entrepreneurial activity. Let's start there, and then we'll
I think
break
it's,
this down a bit.
obviously it's impacting all of us, right?
Yep.
It's impacting us from the perspective of our professional careers, personal, and even in my own use of our AI tools internally, the type of analytics that we can do very quickly. So this is both me as a program manager, but also to a business owner. For instance, one of the project I worked on last week was our deputy administrator, Bill Briggs, wanted to know the break-even point of buying and holding, or selling and holding a loan on a 7A loan. And within 90 minutes, I was able to get the data, run an analysis of every single SBA loan transaction from the first half of the year, calculate the break-even point, apply expected cost of fundings for the institution, and model out the entire scenario for him. And obviously, it's kind of an overview. I'm making a lot of assumptions on the lenders. I don't know their cost of capital. That is not a project that I could have done. With any, I would have probably hired multiple interns and just hoped by the end of it that it might have worked. But that was something I was able to put together.
I would love to see the spreadsheet that you did that in.
It was impressive, and it had nothing to do with me.
That's right.
I wrote the prompt, but anyway.
That's right.
But you think about what those tools mean for a business owner. A conversation having last night about accounting, and I made a joke that my wife is an independent physical therapist. I am the bookkeeper. I hope that works out for us. But the ability, and I was joking because what happened was we just filed our taxes, went on spring break, and then one of the companies she works for was like, "Oh, we made a mistake in your W-2. We have to reissue it." I'm like, "Oh no.
Gosh!"
Now I have to figure out how to refile, and I was able to use it to, using Claude, was able to figure out exactly what I had to do, solve it pretty quick. But you think about an independent entrepreneur. You have your operations, your margins, sales, vendors, like the ability to have support at your fingertips to figure out problems and actually work through them, I think is going to be incredibly potent for small businesses who want to, take advantage of it. It is creative disruption, and it's going to be disruptive, but I think it also leads to incredible opportunities for small business owners. My father-in-law owns a small tool shop in Erie, Pennsylvania. Funny enough, he has an SBA loan, and I helped him negotiate that, 17 years ago now.
Wow. Okay.
The lender's like, "How do you know all this?" So like on the bank side, I was helping him.
Now he knows where to go to complain as well.
Well, correct. Yeah, he knows again. But he's actually exiting soon. He's retiring. But he has 4 employees, and my mother-in-law kind of does the books, and like any of you, our staffing is short, resources are thin, and anything you can do to get a little bit more productivity and a little bit more assistance, I think goes a long way towards helping the business navigate a changing environment. I think that's where small businesses are kind of best situated, is they are nimble, and I think these tools will really benefit those who can take advantage of them and incorporate them into their daily operations.
Now, with just knowing that's certainly from a trend standpoint, things that we're all seeing. These are your partners on the ground who are working directly with small business owners in relation to disruption, whether it's technological or broader, frankly. Any perspective for the audience to share of what are the key things if you were sitting on a stage with 450 of your best friends who are helping to support small businesses? Any perspective that you would provide on how they can certainly not only be the messenger, but also equip and empower small business owners with the right perspective related to technological disruptions?
I think about tech. I tend to look at everything through the finance lens, but some of the dangers of sales-based repayment agreements is sort of, it's a trap that a lot of small businesses fall into, and what it can do to a business's margin, or the effect it has on their margin, might not be fully understood going into it. And that's probably one of the areas that I've seen where kind of access to quick money, it has its place. It's neither good nor evil. It's just it's agnostic in a lot of ways. But for the business owner who takes it on, what it can do in terms of compressing their margin, and maybe not realizing it until it's a little too late, it can be tough. And that's probably the one piece that I'm personally focused on, because I hear that it's time and time again, and it's not just small businesses or small retailers or coffee shops or any kind of the B2C environment, but it's also permeating, larger transactions, middle market bankruptcies. Who is the secured lender? Who has lien rights? Who has access to the cash in the account? And I think that's kind of one of the areas and why collectively we as a small business lending or small business community, if you will, I think just advising on the kind of the fundamentals of running the business, your margins, understanding your associated costs is so important, because once it starts, it can be kind of hard to unwind.
That's right. And that's an area of familiarity. Just to take a quick poll, how many of you have refinanced a small business who, and I'm thinking from merchant cash advances or from quick money that the business owner may not have known the terms? Yeah, raise them high. Yeah. I know that was something certainly we experienced in the DC area as well. So certainly a key area of focus.
It is, and it's an area that, from us, like we don't currently support refinancing it. And the reason is it's technically not debt. I'm not going to get into the academic argument on it, but the reality is our lien is irrelevant. So you can make a loan, and then another one can come under and prime you out. So that is one of the challenges, and really I think it comes down to education, helping the business owner understand. But it's a much larger topic. So.
Well, and just to dig more deeper into some of the specific programs. Certainly, Community Advantage is a critical program. It's under 7A. Just another quick poll: how many people are participating in 7A Community Advantage? Yeah, so you have a good number of folks here. Maybe baseline perspective. Certainly, what's happening with SBLCs and Community Advantage program. Any perspective? Not only from the SBA, but also the critical nature of the program.
Yeah, I think it represents kind of a really interesting cross-section of the program. And, especially in a banking environment that is continuing to consolidate, right? And that's a trend that's been going on and will continue to go on. I think consistently it is a strong performing area of the portfolio, and also represents, as I was kind of mentioning earlier, about just different pathways to capital for small businesses. So I think we're incredibly happy with the performance of it, and obviously want to continue focusing on that. So any suggestions you have for me, and I will be hanging around afterward this panel, I would love that, because this is, again, as I come into this new role with the agency, where instead of being focused on kind of our specialty revolving products, I now am taking a more holistic view. I'd love the feedback on that, because I do think, when you think about kind of where we are as an industry, there's discussion about going up to $10 million for manufacturing. I think it cleared the Senate. That we're moving into middle market, but when you think about those larger businesses, I'm incredibly focused on kind of the foundation and getting the businesses starting, whether it's a microloan or whether it's another local program, into those initial loans to help them grow. It's easy to focus on the large transactions, and certainly we are, but making sure that you can get that start is so important. It's kind of the idea: how do you get a large loan if you can't get a small loan first?
Right.
So there are stepping stones to this, and interoperability between our programs, and helping businesses kind of position the products and easily move from one product into another. So that's something, kind of a theme that you'll see kind of unpacking in the fall, but into the coming years, is we want a business to kind of take that next step in their journey, and we don't want our policy rules being the reason that holds it back. Like, you can't move this product into that product because it might positively benefit your exposure or reduce your exposure. That's something we're actually doing away with, which is the idea that it mostly affects the Express program, but it's not, which might not be the most relevant for everybody here, but moving from a 50% guarantee into a 75, if that's what it helps the business move forward, that's what we want. We don't want to ever kind of favor a competitor over an incumbent lender, right? You don't want the ability to move and restructure your debt as the existing lender. We want you to have the same flexibilities that a competitor could do, just kind of starting from scratch. So that's something I'm personally very focused on. It is a competitive landscape, and deals move around, and borrowers' needs and business needs change. But I want to be really focused on giving the incumbent, giving the person who helping them get them to this point all the same tools, all the same access, and not having these kind of corner cases create unnecessary friction.
Just to pull the thread here too, so certainly we talked about community advantage, but also just the microloan program, knowing as well, how many are participants in the microloan program? Yeah, so good.
Chris Webb says hi. So
That's right.
I
think
want to let everybody know.
Chris is everyone's best friend here, making sure that the program continues. But same question, any perspective to share on the microloan side as well? Either any changes or frankly ways that with the number of users here of the program for smoother use of the program.
Smoother use,
yes.
There were some, the technical assistance that thankfully that process has been resolved, and I know that was, it was disruptive, it was painful, and certainly in the feedback I got, I'd say that process has been cleared up. Focusing on technology in terms of getting that in, and also just, I'm beginning to work with Chris on reviewing, what we can do to also improve the micro program, and technology plays a piece in that. But how many times information has to be added, and what we can do to simplify and streamline the process, I think that is something that we will be working on moving into the new fiscal year. So hopefully, if I can come back in the future, there'll be some updates on that one. That's how I'm inviting myself back to a future event.
Got it. Okay. Invitation will be coming tomorrow.
Excellent.
That's right. All helpful perspectives. I want to get a little more specific to not only geographically, but also as we think through specific communities as well. So thinking through certainly the focus of the administration, not only on rural areas, but also Native communities as well.
Yes.
Any perspective there on how programs can be leveraged, SBA programs can be leveraged specifically to not only combat perceptions of risks, but ultimately to expand capital in these areas as well across the country?
So I mentioned the growth. So thinking about rural communities specifically. So my family grew up outside of Green Bay, Wisconsin. So, and then I'm a Chicago Bears fan.
Is that
so
one clap there?
Yeah.
Two claps?
It's a conflict in
three.
the family, but
Just three claps. We got four claps. Oh. All right.
So the growth, focusing on ag producers specifically. So the grocer guarantee included. It was kind of like the concept was kind of a farm to table almost approach, which is great for restaurants. I'm a big fan, but also from a loan program, it really was kind of a holistic view of industry. So we are looking at industry codes in a way we historically haven't, with some flexibility. I mean, they're not etched in stone. The goal is to kind of put kind of a finer point on directing the flow of capital, but we don't want to get in terms of standing in the way of it. But focusing on kind of the ag sector as a whole, so we have a new product, a new update coming out very shortly on that. Farm enterprises and really starting to take a look at, okay, what does it take for us, for our lenders to support farm enterprises? It always comes down to the house on the farm, and every farm has a house, and we kind of, sometimes I think we make this a little harder than we have to. So trying to find ways, but if we're going to support the community, then I think we have to look at it holistically, and I think that really applies to any community in the country. Is that we have to understand the needs and then evaluate the risk from there. And yes, we are a commercial lending program, but the fact that it's a farm and the fact that there's a farmhouse on it, that's the nature of the industry. You're not going to change that. So really just trying to look at those sectors and applying that same focus to any industry that we're looking at is really trying to look at it holistically.
Absolutely. And so last number of weeks I've spent time in Indian country, certainly seeing not only rural lenses, but certainly unique challenges there. How do we increase, you have all of, again, much of the industry represented here as it relates to CDFI lenders, but just thinking about the number of times where we're still making or communicating about the opportunities to leverage SBA programs, putting on your marketing hat here as well. Like, what are some strategies or ways that we could and should be not only increasing exposure to SBA programs, but where you do have, whether it's rural communities, native communities, are there ways or any ideas that you've been thinking of or cooking up? And we haven't talked about this, but just thinking through any ways we can increase access to SBA programs. Any thoughts come to mind?
Well, I think, I think it is incredibly important to connect local context. And I know that becomes kind of the challenge, especially in rural communities. And I had the chance to travel to, I was in Oklahoma City not too long ago, visiting some meat processors. And we held a kind of a roundtable on the various federal products. We had USDA there, SBA was there, available to that industry. And I think industry associations can be kind of an interesting angle for helping raise awareness. And I think we're trying to do this with our website. Like, we recognize we work for the government. We're not the best marketing agency. So asking a finance guy in the government a marketing question might be
a dangerous proposition.
It's a tough one.
Right.
So see, like, the gears are spinning. I think there's a lack of understanding, and it just seems too confusing. And I think back to the story of my father-in-law applying for an SBA loan. The process is a lot easier than it used to be, and even having a conversation backstage about how this kind of like perception of what the programs used to be 30-something years ago versus where they are today.
Yeah.
And now, like, thinking again, it's still in its testing format, but we have an agent on the website where a business owner can go on and just give their scenario and iterate with the agent about how it would apply. It's trying to like pull the veil back on accessing capital or using a program or localizing it to your individual use. I am the owner of a 463-page SOP. That is a Word document in 2026. I think there could be some opportunities there. So, but making it a little easier to understand, right? You don't have to be in the industry for 20 plus years to understand the inner workings of commercial lending to be able to understand if an SBA product is right for you. But also, from our perspective, we're not always the right product. There are better, there can be better state options, local options, and really just helping educate holistically on the variety of options. I can speak at it from a federal perspective or from the SBA perspective. But everywhere I go, I hear about a new interesting program that's local that is fantastic, and that frankly might be better than our solution at a certain point in time. So I think technology is kind of the best I'm going to be able to do in terms of marketing, because I think just trying to make it easier for them to understand, because they're trying to run a business, they got a family to take care of, they got everything else going on in their personal life. Thinking about like, well, what new government program could really help me? It's a tough ask. So what can we do to make it easier and remove some friction?
Absolutely. Well, I know we're coming down on time. Again, these are your partners.
Yes.
Certainly. And so any final perspective? You have the industry here. You all have a lot underway that I think will be beneficial. And the fact that you're hitting on, which is I think a minimum point that, and frankly, having led a small business lending, CDFI, certainty, predictability, those are things that it certainly sounds like you're shooting for and actions are showing. Any final perspective? Maybe two things to close out on. Final perspective that you have for the industry here. Just what's the three quick takeaways of where the SBA is and where it's going? And then being in public service, you've crossed the country, you're going to many places as well. What's maybe one or two things you see as well, like just in terms of trends that keep you motivated and excited that's happening with small businesses across the country?
So, at least from my takeaway, and why I think it's so important for us to be out, is that I think we as an agency and an industry, from our perspective, are really trying to build the programs around our partners. So getting the feedback on what's not working, what could work better, So I'd say my perspective is I'm here to listen, and whether that's at the event or if it's in a future conversation. It is amazing how easy it is to change something when there's a problem and it's impacting a business and it's impacting a lender and we have to make this change versus like Dan has another dumb idea. So it's so when you bring me something that, hey, it's actionable, this is something that'll help us, I think that feedback is so incredibly important. And that's from the public service perspective that I never would have thought I'd be working at the SBA. It's coming up in 6 years, so I can't say I'm that new anymore, but I came to it from the perspective of a lender who saw problems in the program and wanted them to work better. It's like, well, if it just did this, I could actually use it more. And it was on the export side. And I'd say, I found that to be a rewarding aspect of the role. And ultimately, that's really the impact. These programs are nothing without you, right? They never help a business if they first don't work for our partners. So it's on us to make the programs better to work for you. And I think there's, we share in this role, and that the feedback you see, the pain points you experience both in our process, but also from your small business clients, that feedback is incredibly important to us. Now, we might not be able to move on everything, or there might be other factors that we have to weigh, but ultimately speaking, the feedback, when you send in a situation or something that's not working, it is really collectively how we enact change. And, that's something I'm certainly all ears on, so.
That's wonderful. And so certainly we're at time. There are three things that certainly I wanted to pull forward from the discussion, Dan. One, where you ended, certainly being open to not only listening, but getting that feedback. I know it's tough sometimes, and the ability to move government and to make changes sometimes can be a bit of a bear, I know.
The wheels move slow, but
yeah, that's right. But they do move. That's right. And the second, certainly appreciate the insights from you being a practitioner as well, having a lending perspective, and so certainly for our audience, being able to have the technical conversation as well to make certainly programs work. Kind of getting back to that first point as well, though, we want to make sure you have those avenues for feedback, and so certainly that's something I'll take away as well for OFN as a team to make sure that we can create that space to get feedback.
And if that's something from an OFN perspective that you want to collect and compile, and or if there's ever any opportunities I can come on to meet with the group in the future, I value the relationship. I appreciate the opportunity to be here. It's my first time. I also did invite myself back to the next event. So, but no, I really just appreciate it. Thank you all so much.
Absolutely. Let's give a round of applause for Dan.
Please welcome to the stage Opportunity Finance Network's Chief Network Officer, Seth Julyan.
All right, another round of applause for Harold and Director Pische, please. All right, before we break for our breakout sessions, I just want to give a little bit of a lay of the land for the next day and a half. But first, OFN had the genius idea of setting a 6:30 a.m. line dancing wellness session this morning. I heard that 7 people attended. I would like for them to come on stage and give a demonstration. No, in all seriousness, if you did come, thank you for actually going. I don't know how many people were vertical at that time. I promise next year we will make a more civilized time of when we schedule that. So as Harold mentioned, this is our 13th Small Business Finance Forum. And the reason this event is different from everything else that OFN does is that it's built specifically for practitioners and partners that focus on small business lending. So everyone in this room is here for that reason. So here's what's ahead for the next day and a half. You have 26 breakout sessions to choose from 7 different tracks. This year, we've deliberately tried to move away from your traditional panel formats. We have, yes. You'll find many more deep dives and working sessions that are really designed to get into the details and allow you to leave with something actionable. Tomorrow morning, you have 3 Build and Boost breakfast sessions to choose from. Later this afternoon, you have 11 networking sessions that you'll be able to choose from. So you have real choices of how you want to spend your time here. A few specific logistics. All breakout sessions are on the 3rd and 4th floor. Between our sessions, we have 30-minute breaks. We encourage you to go down to the 2nd floor and visit our expo, grab a refreshment, talk to a vendor, spend some time with colleagues. The vendors down there are extremely diverse. We have expo partners that are consultants. We have expo partners that are in loan management. We have expo partners that are in technology. We have funders and investors, so please spend time going down there to talk to them. If you need anything at all, our registration desk is also on the 2nd floor, and that's where we'll be able to go and ask a question. Finally, all communication, all information you need is in the app. Flip over your badge, download the QR code, and download the app. That is where we send any notifications. If anything changes, that's where that will appear. Finally, you're surrounded by 450 of the smartest, most dedicated, most compassionate people focused on CDFI small business lending in this country. Take advantage of that. Get into the sessions, get into the conversations, and get the most out of your next 2 days. Have a wonderful forum, everyone.